Good afternoon, everyone. Welcome. Thank you for joining us for the next session of the Connecticut Affordable Housing Conference. My name is Carlene Chamos. I am the Operations and Equity Director of the Partnership for Strong Communities. Joining me to support our amazing presenters and all of you on the session is Amy Peltier, our Coalition and Advocacy Director. This session is entitled Pathways to Homeownership for Connecticut Tribal Communities. We just want to say thank you to the Connecticut Realtors for sponsoring this session. And thank you to all of our sponsors. Before I turn it over to our presenters today, I would like to begin by acknowledging that the land on which we gather is a territory of the Eastern Pequot, Golden Hill Pagasuat, Lenape, Mashantucket Pequot, Mohegan, Nemimuc, and Chattahoochee people who have stewarded this land throughout the generations. We thank them for their strength and resilience in protecting this land and aspire to uphold our responsibilities according to their example. This land acknowledgement statement was co-developed by Native Council members and the University of Connecticut. Also, we have a short poll to gauge who's in the room and what you're looking to get out of attending the session. So I'm going to quickly launch our poll. So if you could take a few seconds just to answer the 4 questions. So joining us in the room, we have some nonprofit, and I know there are a few people who are having some issues accessing the poll, some elected officials, some state agency staff. And then what are you most interested in learning about from today's session is housing needs in tribal communities, homeownership resources, data, and available research, opportunities for collaboration with Connecticut tribal communities. And then we had a question in terms of, are you looking to purchase a home in the near future? Majority of people have noted that they are not at this time. And if they're looking for any information around rehabilitation needs, and it was a 50-50 split. So thank you so much for participating in the poll. And I just want to quickly note that in the resource section, you should be able to access some curated resources that you can download. And one of those resources is a brief on housing equity for Indigenous people, which provides an overview of housing experiences of Connecticut's Native American communities. We also included a guidebook to Indigenous protocol from the Indigenous Corporate Training Inc. And now I'm going to turn it over to Ms. Brenda.
Thank you, Carlene. My video is on and off, so just bear with me. Thank you, everybody, for being and sharing this space with us. I see some familiar faces, so it's nice to see you all. Tribal housing definitely is one of the subjects that is near and dear, especially someone that's from a state-recognized tribe. As you can imagine, we don't get the same resources as the federal tribes, so it is a bit of an issue for us. We have, some tribal members that are living beyond the poverty level, and they struggle, even if it is to do repairs on their home, that kind of stuff. Folks don't realize that when you're from when you live on the reservation and it's sovereign land, that's very difficult to receive any sort of financing in a traditional way, such as through the banks, grants. Most times we're not eligible for grants as a state recognized tribe. So it puts us into a really tight position to be able to offer any services, to our tribal residents that live on the reservation, any resources for, if they have problems with their roof or a tree removal or anything like that. So these conversations and in this space it's really important to have them, so that, we could try to work on having the same resources available to the state recognized tribes that are available to the federal tribes, at least on a state level. There is a statutory responsibility of the governor, to be able to reach out to the state tribes, any grants that we are eligible to apply for, and assist us in doing that. Unfortunately, that hasn't been done in a very long time. So we're hoping to kind of re-energize that, and our hopes that, we'll get that back into play, so that the state recognized tribes can have some resources, with whether it's tribal housing ownership or rehabbing, whatever that may look like. So that's one of the important things that, from a state recognized tribe perspective, that's really important, that I wanted to really bring to the forefront this afternoon.
Thank you, Brenda, for that introduction. And
Yeah.
now I'm going to pass it up to our first presenters today. So we have Eric, um, Eric Sprinkle, who's joining us, and I'll let him introduce himself. And I know you will be sharing your slide as well, so give you a minute to have that set up.
Thanks, Carlene. Let me share this. Well, thanks for the introduction, Carlene. So, like she said, my name is Eric Sprinkle. I'm with First Tribal Lending. Here at our office, we have been doing the HUD 184, or what they call Section 184, Native American lending across the United States. We help tribal members anywhere from basically the West Coast to the East Coast and everywhere in between, being able to use this particular program. Me personally, I have been helping tribal members for the last 25 years with just the financing of this program on and off the reservation. We have a group here that's all we do day in and day out is this program to help tribal members. So I'm going to go through some slides here and kind of just give you some familiarity of what this program is all about. What I can tell you, and what Brenda has talked about too, is there are some areas that unfortunately this program, as of right now, won't be able to help, and those are the individuals that are state recognized. This is a program, and I'll talk through that, that you must be an enrolled member of a federally recognized tribe. There are a couple of state recognized tribes. Unfortunately, none in Connecticut as of right now, that we can actually use this program with. So the government, as you guys know, was shut down here for just over almost 40 days. It is back up and running, which means that the program is up and running as well. So I'll go through these slides and kind of give you guys an idea of how this program works. So starting with the actual overview of this. So this program was developed back in 1992. It was developed because, like Brenda had mentioned earlier, there was really no means for financing on the reservations. You as a tribal member wanting to go into a bank and get a mortgage to either buy an existing home that might be there or to build, there was no avenue to get financing. And so this program was developed for that particular reason. It originally was developed on trust land where we could use it. And it's kind of broadened and opened up in some areas where you can use it on and off the reservation. So opened up back in 1992. It is annual funding by Congress. So every year the program will have annual funding for the following year. Again, it's a nationwide program. And these next slides will kind of give you an idea of where the program allows you to use it. As you can see in here, all of the red area, those are actual states that have just particular counties that are approved rather than the entire state. And then that yellowish, orangish color, those are states that are fully opened up. And what I mean by that is you as a tribal member, whether you, let's say, live in Florida and you want to move to Massachusetts, you could move there and use the program anywhere in the state. This shows the counties that are approved. So specifically, let's say for Connecticut. In Connecticut, or I should say the state of Connecticut, the entire state's not opened. They've opened 3 counties. So the 3 counties in Connecticut are going to be Fairfield, Litchfield, and New London. So those are your approved 3 counties that you can use this program to either do new construction or purchase existing homes. So what are the different areas that we can finance? Let's say in Connecticut, you can either do it on the reservation or off. So you can do it on fee land where you would pay property taxes. You can also do it on tribal trust land, meaning if you're leasing from the tribe, we have to make sure that it's the correct home site lease between the tribe and the 184 program. And then there's also individual trust land, and there's restricted fee land. And we actually see some of that restricted fee land in Connecticut with the Mashantucket Pequot tribe. The partners that make this program what it is today, it's going to be HUD, it's going to be your lenders, your tribes, your tribal housing authorities, and the BIA. All of these are key to this program continuing to move forward. Some of the main highlights of the program. So there are no income limits on this program. It's not credit score driven, meaning when we pull a credit report, we're not looking at the score to qualify you. We're actually looking at your credit. You have to credit qualify. Flexible underwriting. And what I mean by that is you actually have a live underwriter that's actually underwriting your file. It's not something that we plug into the system and the system tells us whether or not you're approved. So we actually have live underwriters that underwrite. There is no monthly PMI, which is that private mortgage insurance. So no monthly PMI on this program. The down payment is 2.25%. And the debt ratio on the program is 41%. In regards to interest rates, the interest rates are based on whatever the market rates are each and every day. So who can get a 184 loan? Any Native American enrolled in a federally recognized tribe, Alaska Native. You can actually have, and we've helped several of these tribes and tribal housing authorities, but either the tribe or tribal housing authorities can be the borrower as well under this program. The loan features, so you can do up to a 30-year mortgage and as low as a 15-year mortgage. One thing about the program is there's no prepayment penalty, no payment for paying it off early. You don't get charged anything like that. If you want to make extra payments, you want to pay it off early, you can do so. You'll never be penalized. The program does require fixed rate financing. So once we lock in that rate, it'll be fixed for the term of that loan. The program does charge a one-time 1% loan guarantee fee. That's the program's charge for using the program. And then that fee can be financed in. So when you talk about your down payment plus closing costs, that guarantee fee can actually be financed into the loan. It's not something you would have to pay out of pocket. The 184 program, and just so everybody understands, is assumable. So it is assumable type of loan. So, you know, you just have to make sure that whoever is going to assume that loan where it's currently at, that individual is an enrolled tribal member of a federally recognized tribe. And again, no adjustable rates. And then we can't do any commercial type structures. It's strictly for single family housing. Some of the loan types. So you can look at purchasing an existing house using this program. You can look at buying an existing house and doing some rehab to it or remodel. You can actually refinance your current home and do rehab to it. And then you also can do new construction, whether that's a brand new manufactured home, modular home, or having a house built from ground up. And then on the refinance side, you can look at doing like a debt consolidation or a cash out with the program. Some of the credit history, I think this is the biggest thing as we go kind of dive into this, is talking about the credit, because like I said, the program doesn't look at your credit score. It's based on your actual credit. And so these are the things that we have to look at when we're doing what we call a pre-qualification once you've completed an application. So some of the things that the program requires is if you had a foreclosure, it has to have been discharged for at least 3 years. No bankruptcies within the last 2 years. And then no court-ordered judgments and liens within the last 12 months. Now, again, some of the beauty when I talk about no credit scores is if we pull a credit report and you have no credit, that's not a deal breaker. We just have to be able to have you show that you have some alternative credit. So if we pull a credit report and you have no credit out there, then we're going to need other alternative credit. That could be from whether you have a Hulu account, a Netflix account, maybe a utility company that you pay monthly, auto insurance, things like that. As long as you could show that you've been making a payment currently and have been for the last 12 months on time. And again, sometimes within the program, credit-wise, if we can't do something right now, it's not no forever. It's just maybe not right now. We've got to work on getting that credit built up before we can move forward. Again, with this credit review, I'll reiterate it again. It's not credit score driven. It's based on your actual credit. We can use non-traditional credit. Current payments need to be on time within the last 12 months. Now, depending on the scenario, if we have a couple trade lines out there that you may have a late payment within the last 12 months, but all of your other credit is in good standings, on time with or you've been on the job for the last 2 years, you have money saved up, there's workarounds with that. It's not a straight no if you have a couple lates in the last 12 months. So we look at the big picture to make sure that does this make sense to move forward? Current mortgage. So if you're doing a refinance on your mortgage, we got to make sure you're on time within the last 12 months. And then any open collections would have to be paid off and or settled. Some of the other details within the program, they look at large deposits within your bank accounts. So if you have, any large deposits over $500, we need to document those, meaning give us an explanation for what these deposits were from. And if they were checks, we need copies of the checks to make sure they all match up. If you transfer money from one bank to another or one bank account to another, we need to have bank statements for all of those accounts. So if you provide me your checking account bank statements for the last 2 months and we see transfers to another account, the program's going to want the last 2 months of that account as well that you transferred from or to. Some of the other things we look at is overdrafts. When we're looking at your bank accounts, we're not just looking to see what you have saved up. We're also looking to see how you manage your funds. And so we want to see if you have any overdrafts. Are you living paycheck to paycheck with overdrafts in there? So the program's going to look at that as well to make sure that, we're not setting somebody up for failure. Student loans has been a big thing with the program. So if we pull a credit report and you have a student loan balance out there, the program's going to say, as of right now, they want us to calculate 1% of whatever your balance is on your student loans as a monthly payment. So that's going to go towards your debt to income ratio as your monthly amount. And then we need to, be able to document where you've lived for the last 2 years. If you've been renting, we'll have to get what's called a rent verification and just verify that your rent has been paid on time. Next slide here talks about some more credit. One in particular is payment shock. This is a big, big, big one. Like, this is something that the program really looks at hard. And that is, let's say you're living with family, and now you're going from not making any rent or mortgage payment, and now you're going to purchase a house. And now you have that 100% payment shock going from nothing to now a mortgage payment. So the program's going to say we need to offset that payment shock to make sure we're not setting somebody up for failure with that. And so what we're showing is that having the borrower be able to provide their bank statements to show they have money saved up to offset that payment shock. So for instance, if you're going from nothing to, let's say, $1,000 mortgage payment, then they want to see you have at least $6,000 saved up to offset that payment shock. So it's roughly 6 months. The other thing is make sure that you file your federal taxes. That's another big one. We need to show that you filed. If you owed anything, make sure that those have been paid. If you're self-employed, we need to make sure that we have your last 2 years' tax returns. Some other items that come up with this program, which we call, special circumstances, but they're non-arm's length transactions. And we see this a lot from family member to family member. So this occurs when the buyer and seller have a personal relationship. These transactions basically face a little bit more scrutiny than your usual arm's length and can take longer to close. So basically, let's say mom and dad is selling a home to their son or daughter. This is where there's going to be a little bit more documentation needed as far as how we process and finance that loan. So I put it out there because this is something we see a lot across the US with this program. And then they also have some guidelines around if you currently own a house and you have a mortgage on that house and you're wanting to maybe keep that house but buy another one, they will allow that, but there's some guidelines around how we can calculate that. So you must be able to show that the home has been listed with a realtor. So your current house that you have a mortgage on, there's 2 options. You either have to show that you have it listed with a realtor, or that you have an active lease that you plan to rent the home before we close on the new house. So, and again, if somebody has a scenario like that, we'll go into more detail with that. But I like to throw that out there because these last 2 slides are probably the most common we see across the board with the program. And then the various forms of income that we can use with the program. So whether it's your salary, your hourly wage, we can use your overtime, your bonus, your commission income, your overtime, your bonus, your commission, as well as seasonal and part-time. All of that, you have to be able to show that you've been receiving it for at least 2 years, because we'll average that out over a 2-year time period. And then we can use your retirement income, your alimony income, child support. We've had individuals that have rental properties. As long as they show up on your tax return and there's a positive income from it, we can use that income. Obviously self-employed income, and then those tribes and tribal members that receive tribal distributions. We can use those as long as you can document you've been receiving it for at least 2 years. And just some liability tips. It's crazy, but it happens more than you think. But while it may be tempting, do not go out and purchase a new car or furniture or appliances or open new credit cards or lines of credit if you're currently in the process of applying for a mortgage. We just recommend don't do that. It could hurt you getting approved for a loan. So just be very strict on your credit while trying to get a home. Funds to close. These are just examples of different areas of what you can use to cover your down payment and closing costs, whether it's coming from your savings, your checking, secured funds, gifts. We just have to make sure that you're getting a gift. It can't be cash. We have to be able to document coming from another account. If you're refinancing, you can use the land equity. Sale of personal items. You know, we've had individuals sell cars, boats. Just make sure if you do that, that you put together a bill of sale and document what it is that you sold. Make, model, the year, and what you sold it for. In some cases, obviously, you may be selling a house and buying another house. You can use the net proceeds from the sale of that house towards the new one. I've seen people use their 401k, sales of investments. So those are all the different areas of where you can come up with funds needed for down payment and closing costs. This next slide is in regards to new construction. So under the 184 program, the program allows you to do what's called a single closed construction loan. So it's your permanent financing and your construction financing all in one closing. And if whoever you pick and choose for a contractor, anything over $25,000, which obviously in today's world, you're not going to be able to build a house for less than 25,000. So basically anything over 25,000, we have to vet those contractors, meaning we have to have them complete an application with us, make sure that, and then we pull credit, make sure credit-wise they're in good standings, both on the credit side and asset side. Because with this program, the contractor doesn't get paid anything up front. They get paid as work gets done. So we close the mortgage for you, and then those funds to build the house are now sitting with us in a construction escrow account. And as that work gets done, an inspector comes out, inspects that work, and the contractor draws for what's been done. And then we hold back 10% of what you're drawing for until the contractor is 100% done. So again, single close construction loan, one-time closing on both your permanent and construction. Mortgage payments do start within that 45 days. So, you know, let's say we close, like in this example, if we close in January, your first mortgage payment will start March 1st. You may not have a house yet to move into, but the mortgage payment does start because it's a one-time closing. And then all the funds after we close go into a construction escrow account with us, and then we manage that and pay out to the contractor as the work gets done. So that's what we call a single closed construction loan. The next slide is more specific for tribes that have to deal with leasing of the land. So if we're doing a mortgage on trust land, these are going to be the requirements that we'll need when it comes to leasing on tribal trust land. So we'll need a copy of your fully executed home site lease signed by both the tribal member and the tribe. We'll need a copy of your certified title status report. And again, we can help you with this process. But these are the things that we will need. And then if you're getting water and sewer services from the tribe or from Indian Health Service, we'll need to make sure we get documentation on that. That basically states that they're going to provide these services to you at no cost. And then we have an environmental form and a land status form that will need to be completed by the tribe during this process as well. But these are just your land documents that we'll need for the land purpose. And then we have a slide in here that just talks about the benefits of using a realtor. So if you're looking to purchase a house, you know, the benefits is, you know, their education and experience in selling of a home, their neighborhood knowledge and price guidance, their negotiation skills and handling the paperwork for you. They're basically your buffer between the buyer and the seller. They're able to answer any questions after closing. And then they can help with property tax information as well. So just some good use of if you're looking to use this program, and you're looking at buying an existing home to, look at having a realtor help you out. And these are just the things that we would need if you are wanting to apply. We'll have you complete an application. We'll need a full month of pay stubs, your last 2 years W-2s, your last 2 years of tax returns, your tribal ID, and then your last 2 months bank statements. And then our last slide is, if you are interested, wanting to apply, you can go to the www.hud184loans.com and apply online. And what we'll do is we'll do a soft pull on your credit. So we're not going to do a full hard pull credit report. We'll do a soft pull. And then we'll review that credit. If credit-wise everything looks good, from there we'll calculate out, based on your income and your debts, the maximum amount that it appears that you may qualify for under the program, and send that out to you. And that is it. I hope that helped you guys kind of understand that HUD 184 program a little bit more. By all means, if you have questions, concerns, especially those tribal members that are state recognized, please feel free to reach out. I can give you the information to reach out to the Office of Native American Programs to see if they can help try to open up more of these state recognized tribes to be able to utilize this program more. So thank you so much for your time.
Eric, it's Brenda. I'm more than happy to work with you on that.
Perfect.
Yeah, and I put a question in the chat.
Okay.
When you talk about the housing authority, we do have a recognized housing authority because we did approve a HUD grant back in the early 90s. So with the housing authority, could we seek funding? Can the tribe seek funding through the housing authority, even though it's a state recognized tribe?
Unfortunately, they're going to tell me no,
Okay.
unless we can get your tribe approved.
Okay.
Because part of that, Brenda, that they have to look at is the foreclosure and eviction procedures. I
Yeah.
know that's some of the big things that they're working on. So that will be a piece of that would need to be in place. I can get you in touch. I don't remember, Brenda, if I sent you Tanya Plummer's contact information, but she's the director for the Office of Native American Programs. And
Okay.
she would be your best resource to
Okay.
get your tribe approved.
Okay. Thank you, Eric.
Absolutely.
Thank you, Eric. And I know that we have Senator Austin joining us, and I know she has to jump off shortly. So before she leaves, I just wanted to invite her into the space. She has been a champion for tribal communities in the state, and I know that it was important that she participated in this conversation. So I just want to yield the floor to her for a few minutes.
Really, I don't think that there's anything for me to say. I think this is up. Eric's got his business plan here, and then somebody named Brian is doing CHFA. So I don't think that this is the time for state policy, because it's not gonna, there's not enough to do here right now. So appreciate it though. Talk to you guys soon.
Thank you, Senator. Brian?
Hey there.
Thank you.
Well, let's see if I could share my screen here. All right, so thanks again for having me. My name is Brian Boyagi, and I'm here with the Connecticut Housing Finance Authority, or CHFA for short. And our mission is to alleviate the shortage of housing for low to moderate income families in Connecticut. So I'm here to speak kind of on a statewide level as to what we've been doing to help all throughout Connecticut. I personally work in the homeownership department, and a major focus of what I do on a day-to-day is creating partnerships with local banks and mortgage companies to stimulate growth of our affordable lending programs. We firmly believe here at Homeownership is still the American dream and the cornerstone of building generational wealth. My team and I want to do everything we can to help prospective homeowners reach that goal. So last year, I'm proud to say that 2024, CHFA had a banner year in regards to helping first-time homebuyers. In spite of the hyper-competitive real estate market that we witnessed, with significantly fewer homes for sale, CHFA helped 3,873 families reach their goal of homeownership, which was CHFA's biggest, most active year since 2007. With that, CHFA issued over $1 billion in financing, helping first-time homebuyers in 150 cities and towns all across Connecticut. Also, CHFA is very proud of the positive impact that we've had with our programs and our resources within the BIPOC community. 50% of our borrowers last year identified as Black, Indigenous, or other people of color. So we're really helping, everyone across the state. Many of our borrowers are also first-generation homebuyers, which, as I mentioned before, truly creates that foundation for building the generational wealth and economic stability for years to come. So what makes CHFA different and unique? I kind of think we have four main tenets that we're built upon, and I kind of separate them here on this slide. The first one is we create the mortgage programs with low interest rates and low closing costs for first-time homebuyers, or somebody who hasn't owned a house or primary residence in the last 3 years. They also are considered a first-time homebuyer. And by virtue of our mission, CHFA adheres to income limits and sales price limits. Again, we really want to help those that need it most. So we're dedicated to helping the low to moderate income borrowers and families in Connecticut. The third one is the down payment assistance programs that we offer, which are powerful resources that help many of our borrowers overcome the hurdles of buying a home when they are dealing with challenges in building that savings account for the down payment. And then the last tenet is the homebuyer education, which we offer free of charge all throughout the state of Connecticut with 12 different HUD-approved counseling agencies. While the home buying and mortgage process can seem intimidating at first, it can be simplified and demystified if a borrower completes our free home ownership courses. So here's a snapshot of today's interest rates. Through the sale of mortgage revenue bonds, CHFA has the advantage of offering first mortgages at below market interest rates. Our rates are updated daily on our website, www.chfa.org. And you can see right here that our FHA, VA, and USDA government rate is 5.75% today with no points. Our conventional Freddie Mac and Fannie Mae loans are at 6.125%. If you were to compare these rates with a typical standard mortgage for a regular home buyer who's not a CHFA home buyer, you'd probably find, when you compare the closing costs and everything involved, that we tend to be about 3/8 to 1/4% lower than a standard mortgage. So that could mean savings for the borrower, depending on the loan amount, of $50 or $60 or $70 per month, which could tally up to $700, $800, $900 a year. So over the life of the mortgage, that's thousands of dollars of realized savings. Our programs can be utilized to purchase many different types of residentially zoned properties all throughout Connecticut. Single-family houses are obviously the predominant stock out there, but also there's lots of 2, 3, and 4 unit multifamily homes that, again, zoned residentially, a borrower can qualify for. Condos, townhouses, PUDs, and mobile manufactured housing, which is kind of an interesting one because our team recently enhanced the interest rate and the down payment requirements on our mobile manufactured housing program that we've had for a few years. So it's become more advantageous now, and it's led to a dramatic increase in the program's usage and approval rate. Due to time constraints, I can't really get deep into that right now, but definitely check out the details on our website. There's a flyer there as well, but I'm happy to say that this program is reaching a lot more people. Again, one of our most impactful ways that we help is with down payment assistance programs. Given this current economic climate that we're witnessing with high inflation, which has caused a painful increase in monthly rent, utility bills, groceries, almost everything, it's getting more and more difficult for people to save money for that down payment. Thankfully, we have the Down Payment Assistance Program, or DAP for short. This is actually a long-standing program we've had for many years. It's had a few different iterations over the years, but it's used in conjunction with the CHFA First Mortgage. It's a smaller separate loan of up to $15,000 or 4% of the sales price, whichever is lower, to help the borrower pay for down payment and closing costs. The great news is that it's a 30-year fixed rate, small mortgage at up to $15,000. The rate is currently 5%, so it's a below market interest rate. So at the full amount of $15,000, the payment will only be $80.52 a month, and it helps that borrower achieve the goal of the down payment with, an extra $15,000. That follows our normal income guidelines, or income limits rather. And then we have another powerful down payment assistance program called the Time to Own program. And it's our latest program, and it came to be in June of 2022. Our colleagues at the Connecticut Department of Housing created the Time to Own program, and CHAFA administers the program on their behalf. Like DAP, Time to Own is used in conjunction with the CHAFA First Mortgage, and it's being offered with a maximum loan amount of $25,000 in every city and town throughout Connecticut. The interest rate on Time to Own is 0%, and there's no monthly payments whatsoever. Even more impactful, this is actually a forgivable mortgage. What does that mean? It means every year that the borrower holds the mortgage, 10% of the balance gets forgiven. So at the end of 10 years, the whole balance would be forgiven. The funds could be utilized for the down payment up to 20% of the purchase price, as well as closing costs. In addition, the borrower can also qualify for additional down payment assistance loans with other outside sources, which we call community subordinate financing. Sometimes a city or a town municipality may have down payment assistance programs that they offer to people buying in their city, or there's other organizations out there that are offering down payment assistance, such as HDF, which we see a lot, Home Loan Bank of Boston, and others. And the good news is Time to Own could be paired and layered with these other down payment assistance programs, thus maximizing the borrower's potential resources that are available to them. So since Time to Own launched a little over 3 years ago, the program has helped nearly 7,500 borrowers reach their dream of homeownership. So it's been pretty powerful. As this slide illustrates, the program is helping borrowers with lower median income levels to remain competitive, helping them reach higher sales prices, all while maintaining lower monthly payments. I'm also proud to point out that, given the impact of Time to Own, many of our leaders in the state Senate and the House of Representatives, as well as our governor, have supported the program, and they recently ratified a new 2-year budget for the state, and it includes significant funding for the Time to Own program. So with this additional commitment, more Connecticut residents will be able to reach that dream of homeownership. So where do you start? I definitely recommend visiting our website, www.chfa.org. And on our website, you'll see that there's many different sections there based on, who is on the website. Could be home buyers, homeowners, lenders, real estate agents, etc. But we'll focus on the home buyer section. And on there, I definitely recommend anybody to check it out. Once they're there, they'll find the CHAFA First Time Home Buyer Guide, which has our recommendations on the 8 steps to buying your first home. I've highlighted a couple of the first steps, which number 1 is empowering yourself with free home buyer education. And the second one, contacting a CHFA participating lender for a mortgage pre-approval. So in 2024, we also witnessed a banner year for homebuyer education attendance. Over 5,700 households benefited from our free homebuyer workshops. Our HUD-approved counseling agencies also offered assistance with one-on-one counseling services, foreclosure prevention workshops, and financial fitness workshops. On our website, you'll find the list of our 12 different HUD-approved counseling agencies, including our newest one located in New London. This list also details the classes that are being offered by each counseling agency. We have a calendar on our website with all of the classes being offered by our counseling agencies. Many classes are offered online and virtual, which is very convenient in this day and age. Or if a borrower prefers to learn in person, they could certainly do that too. There are many classes that are offered in person. You can register right here by clicking on whatever link for the class you want. And if Spanish is your primary language, and that's the language you're most comfortable learning in, there are Spanish-speaking options as well. The next step we recommend is the borrower contact one of our CHFA participating lenders to become pre-approved for a mortgage. CHAFA currently partners with over 80 different lenders that share our vision of providing affordable mortgages to first-time homebuyers. It's a requirement that all of our lenders have at least one brick and mortar branch right here in the state of Connecticut. with loan officers who are local and therefore understand the Connecticut market. I highly advise every first-time homebuyer to review this list first to verify that their lender is in fact a CHFA participating lender. And that concludes my brief overview of our helpful resources that CHFA offers throughout Connecticut. And again, thanks, Carlene, for inviting me.
Thank you. Thank you to all of you. We do have some time for questions from the audience. So if you have a question, you can come off mute and you can raise your hand and come off mute and ask that question. Okay, not seeing any questions. I just want to say thank you to everyone for joining us for today's session. And I've learned a lot from both of your presentations today. And yes, let's keep the conversation going. And I know Brenda, you and Eric are connecting in terms of how we can ensure that the Section 184 program can be accessible to our state recognized tribes. And this is our last session of the day. So we hope to see you all tomorrow morning at 9:30 a.m. for the Federal Housing Advocacy Roundtable. And this session is being recorded, and we will make sure to share that with with our tribal partners who were not able to be in attendance today. So thank you. If there's no other questions, if there's no questions, we can adjourn this session.